Good morning, ladies and gentlemen, and welcome to the Hummingbird Resources PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today, and any additional responses can be published on the Investor Meet Company dashboard. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand over to CEO and Interim Chair, Dan Betts. Good morning.
Good morning. Thanks very much. Thanks for everyone's time dialing in this morning. We wanted to take a bit of time to talk through the current equity placement and also give an operational and exploration update. In order to get us started, just a bit of housekeeping. Obviously, I am on the call. Dave Muir, who is the Group Data and Exploration Manager, is on the call. And I'll hand over to Dave at the appropriate time to talk through our exploration plans. Unfortunately, Monty has just been called away on an urgent personal matter this morning, but James Husband is here from IR and Corporate Development and will step in for Monty. And additionally, apologies from Tom Hill, Finance Director, who is not available this morning, but any questions you have that we are not able to answer on this call, we will get you a direct response from Tom's department. So hopefully we can field all the questions you have in a live question session at the end though. So let me go through this presentation, which will hopefully answer most of the questions and then open it up to the floor. So what I want to go through this morning is the equity placement, the use of proceeds, and then give an operational update at both mine sites, an exploration update, and a bit of an outlook looking forward. So as per the recent announcements, we are currently doing a $27.7 million placement. The price of this placement is 11.26 pence per share. There is a $25 million cornerstone investment by CIG Group, which is our cornerstone investor. There is an additional 2.7 million across the first tranche. 1 million of that is from one of our non-executive directors, Mr. Ernest Nutter. So the placement is split into two tranches. The first tranche of 5.5 million is firm and committed and done. The second tranche is, of course, subject to shareholder approval, and the general meeting will be held, I think, on the 10th of January. There's a timetable later in this presentation. We are also doing an open offer with this placement. The reason that we are doing an open offer is not so much that we need the additional money, more that we want to make sure that all shareholders are offered an equal opportunity to participate at an equal price. We are obviously mindful of the dilution a placement like this has on the company, and we want to make sure that nobody is disadvantaged and it is fair and equitable across the board. The rationale for this placement is obviously something that is not taken lightly. The ramp up of our Kusa mine has been slower than we would have liked, and this has put stress on the company's balance sheet. I guess the simplest way to explain that is a cash squeeze, and we need extra liquidity to shore up the balance sheet and make sure that we can deliver with all our contractors and deliver to the cash flows and expected profitability as per the plans. We also are making sure that we do this in a way that is substantive and that we have enough capital to develop our growth plans and pursue our exploration strategy, which is essential. And I can come more onto the exploration later. But with two short mine life mines, we can't continue to delay exploration because you will at some point hit a brick wall. So the open offer is open to all shareholders. If anybody would like to apply for taking part in the open offer, it ends at 11 o'clock on the 9th of January, and then the general meeting will be on the 10th of January. The circular that was circulated yesterday contains a lot more information, and we can make that available to anybody that would like to see it who hasn't already. Here is a more detailed timetable, but the key dates I've already alluded to. The open offer closes on the 9th of January with the general meeting on the 10th of January. So why do we need to do this placing, and what are we going to use the proceeds for? Firstly, we need to explore and we need to develop our mine lives. So both at Yanfolila and at Kusa, we have two relatively short mine life mines. By adding a year's mine life, you don't need to find that much gold, but you will materially increase the NPV and future cash flows and value of our company. The exploration goals Dave will go into later, but they are focusing around near mine reserves and extensions of the pits to get quick mine life extensions. We have also recently concluded the consolidation of our ownership of the Dugby gold asset in Liberia via a 51% shareholding in Pasofino. We will be partaking a placement into Pasofino of circa $2 million, which will increase our shareholding above this level. And during the year, we will be looking to ensure that this project is taken forward to realize some value for Hummingbird shareholders. The asset at today's gold price has an NPV of circa $1 billion. It is obviously a hugely valuable asset for us. We believe that the DFS that Pasofino completed has areas of material improvement, particularly on the power, the metallurgical recoveries, and some of the overall capex numbers we think can be materially improved. And those are specific tasks that we will be deploying or working with Pasofino to make sure they deploy the relative skills to get those programs conducted during 2024. The main point of the placement, though, is to strengthen our balance sheet. During 2024, we have an aggressive debt repayment program, which will deleverage our balance sheet significantly, with $77 million of debt being repaid during the year. In order to get to the position where we can do that, Kusa needs to be firing on all cylinders. And due to the late mobilization of the mining fleet and the fact that we are late in accessing the high-grade ore at Kusa, we have been late in doing that. So we have the situation where we have a fully built mine, lots of costs, and not the revenue that we need to get into that position. So that really is the main reason for this placement, is support to get through that situation. Obviously, we've been working extremely closely with CIG Group and Chorus Bank, who have been extremely supportive of getting through this ramp up and focusing on the fact that as soon as we get there, Kusa will be an extremely profitable operation. I think if people can take a moment to imagine 12 months from now, when you've paid down $77 million on the balance sheet and Kusa is operating at full capacity, I think the ability to transform Hummingbird's prospects in a very, very short period of time are pretty unique and exceptional. So this graphic is really intended to illustrate the key issue at Kusa. You can see the yellow area on this graphic is the high-grade ore. And obviously the top is where the mining is in the pit at the moment. So we really are at the high-grade ore. We are imminently about to start accessing and processing higher-grade ore. We have mined a lot of the overburden. A lot of the depleted ore from artisanal mining is now out of the way. The plant is operating at nameplate on a 24-hour basis. And importantly, Corica, the contract miner, does have a full complement of 4 fleets on site. And as we speak today, the mining volumes are at contracted rates most days. Obviously, we would note the second bullet point there is earlier this week, there was a very significant fire at the fuel depot in Guinea. This was the biggest fuel depot in the country that affects the entire country's fuel supply. We are obviously working with the government and our fuel contractors to ensure stable supply, but this has clearly got disruption for everybody in Guinea. And As a result, we've had to slow down the mining of the fleet at the moment whilst we get security of supply. This is a short-term issue, hopefully only a few days, but as it stands right now, this minute, Guinea's fuel supply infrastructure is damaged. So at Yamfilila, at the end of November, we had produced 78,220 ounces of gold. The AISC up to that point was 1,340. You can see from the graphic on the right that we're online to meet guidance at Yamfilila for the year. Whilst the last 2 or 3 months have been more challenging than we would have liked, we've had some issues with the mill and operational issues that have led to processing lower grade than anticipated, but we're still on track to meet guidance at Yamfilila. The underground at Yamfilila is developing. We're 125, 130 meters into the development. Ventilation dewatering is taking place, and we anticipate first ore from the underground next year, probably producing up to 10,000 ounces of gold from the underground next year at Yamfilila, contributing to production and then obviously becoming increasingly more important in terms of the production profile as we go forward at Yamfilila. So at that point, I'm going to take a breath. I'm going to hand over to Dave to talk through the exploration prospects and plans.
Thank you, Dan. So Hummingbird completed a limited but successful RC drilling campaign at Yamfilila in 2023. This drilling targeted 2 key deposits, Gonka and Sanamali West. The Gonka drilling was focused to the south of Gonka Main and was planned to increase the geological confidence in this area, as well as to investigate extensions to mineralization. Multiple high-grade intercepts were drilled, and mineralization remains open to the east and at depth. The geological model has been reviewed, and an updated mineral resource estimate is in the process of being finalized. Gonka remains a key target for Hummingbird in 2024, and this drill program will be confirmed once the updated MRE is available. The Sanamali West drilling targeted a northeast-southwest high-grade mineralization trend which intersected the main ore body. Mineralization along this trend was defined to the license boundary in the southwest, and this is included in the current mine plan. Results from the holes to the northeast showed that although geological conditions were favorable, gold was sporadic, and no further work is planned here at this stage. Sanamali West North Pit is a priority 1 target for 2024. So our core strategic focus is on the expansion of resources to reserves at Yamfilila and Kusa, and the maintenance and extension of the life of mine. Exploration is developed through our structured target to mine strategy, which primarily focuses on target definition, resource definition, and mine development. Looking forward, we have defined a number of key targets and prioritize them on the basis of near-term value add. In other words, P1 targets are those which are on the mining license, usually immediately adjacent to existing pits, and have defined resources, so can be included in the mine plan without delay. P2 or priority 2 targets are on the mining license, but further away from current pits, and P3 targets are earlier stage or have a longer time frame, but will feed into the medium to longer term resource base. The plan on this slide shows the Yamfilila mining license and the exploration permit immediately to the south. Targets have been prioritized as discussed and are shown by the yellow callouts. Gonka open pit extensions are a P1 target for 2024, but this deposit also has significant underground potential, which will be investigated further once results from the open pit drilling have been modeled. There is an inferred resource at the Sanamali West North deposit, which is situated on the same structure as the Sanamali West main pit, and is also a priority 1 target for 2024. Karma was drilled in 2021 with some good results. Mineralization remains open to the north, and a maiden resource estimate is planned once the 2024 drilling has been completed. The P3 Mira targets were defined by a targeting study that was completed by Mira Geoscience using machine learning techniques to review and process all available data for the area. These are more greenfield type targets, but important for the longer term for Yamfilila. The 2 Kusa mining licenses are shown on this slide. Current mining operations are focused on Khoi Khoi Pit 4 on the Kusa mining license. Priority 1 targets here include multiple near-pit vein targets identified by geological mapping in 2023, as well as potential sub-parallel structures to the east and west of the Khoi Khoi deposits. Drilling at Kusa has been mostly limited to a maximum depth of less than 175 meters, so the depth extensions of the mineralization have not been tested and remain open. High-grade mineralization plunges at Sanifalan and JJ are still open and require investigation for underground mining potential. The X-vein area in the northwest of Kusa is geologically exciting, with 2 inferred resources, including the X-vein main, which is 83,000 ounces at 7.3 grams a ton, excuse me, and which remains open to the north and at depth. Multiple structures have been mapped in X-vein west, but minimal drilling has been done here, and this area is a key target for Hummingbird in 2024-2025. Okay, thank you, and hand back to Dan.
Seem to have lost control of the there you go. Right, so if I can just conclude with a bit of an outlook and a wrap up. We think Hummingbird is very well positioned for strong organic growth. I mean, clearly, as soon as Kusa is operating at full production, which we anticipate imminently, and a full year of production in 2024, we anticipate more than doubling our production to being nearly in the region of a 200,000 ounce producer next year. The exact guidance for next year will come out in January when we know the face positions at the end of the year. But I mean, clearly this is a material change to the company and the culmination of years of hard work and investment. So this extra ounce profile should also help us drive down the AISC of the group. And then we have the development project in Liberia, which is separate in a listed company called Pasofino in Canada. So this is non-dilutive to Hummingbird shareholders, and I think structured and positioned in an intelligent way to maximize value for Hummingbird shareholders with minimum dilution impact for financing and future development costs. So I think the company is in a very strong position to show strong internal organic growth. If I can have the next slide, please. So as I alluded to earlier, next year we are paying down $77 million of debt. This will clearly totally rebalance our balance sheet and put the company in a much stronger financial position. You would like to think that as you pay down the debt, as long as we are showing increased reserves and mine life, then that should translate into equity value, and we should start to see a reposition of Hummingbird in the market. If I can have the next slide, please. One thing also that I was going to mention on the last slide, sorry, is that we have also undertaken some price protection for gold by means of zero cost collars. So this has not cost the company any money. It has put a floor on 60,000 ounces of production over the first 3 quarters of next year at over $2,000 an ounce. And we still are exposed to the upside on those gold there's lots of different lots that we've bought, but in the region of $2,130 an ounce. So the company can still benefit from significantly further upside in the gold price, whilst putting a floor on the gold price that will help ensure us to manage our cash flows to make sure we can meet these debt repayments and manage our financial commitments. In terms of near-term news flow, obviously this placement is current and live. The circular went out yesterday. The offer to shareholders closed on the 9th of January with the general meeting on the 10th of January. Assuming that all things go well at that meeting, later in January there will be financial year and quarterly results for 2023 with detailed guidance coming out in January, and onwards and upwards from that point onwards. Next slide, please. So that brings to an end the presentation section of the meeting, and it would now be good to open it to anybody for live Q&A.
That's great. Dan, Dave, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand side of your screen. Just while the company take a few moments to review your questions submitted already, I'd just like to remind you that a recording of this presentation will be available for your review post the conclusion of the meeting. Dave, if we do lose your camera, just carry on, reconnect, and we can hear you very clearly. So thank you for your patience. James, if I may hand back to you, you've received a number of questions from investors throughout today's presentation, so thank you to everybody for engagement. James, if I could ask you just to read out the questions, and then I'll pick up from you at the end.
Thanks, Mark. Firstly, thank you all for submitting your questions both on this call and prior to the meeting. Whilst we may not be able to answer your question, we have endured to try and combine as many as possible, and we'll look to answer any further questions post the meeting. I think the first question is, Dan, why was the placing $30 million, and sort of what are the key drivers of that quantum?
So first of all, it's probably good to have a bit of perspective here. I mean, $30 million sounds like a big number, and it is a big number relative to our share price. And unfortunately, Hummingbird is therefore disadvantaged by a small market cap, and as a result, suffering significant dilution through this placement. That is one of the reasons we are doing the open offer, so that everybody can be included pari passu on equal terms. But I'd just like to put it a little bit in context of Hummingbird, the company. $30 million is not a lot of money for Hummingbird, the company. You know, next year, Hummingbird will be getting on towards $500 million of revenue. The annual budget to run the company is $250 million. You know, the run rate to run the company is $20 million a month. And when you have a cash squeeze and you are running at full operational capacity, you've got mining fleets running, you're employing nearly 2,500 people, the numbers get pretty big. So I think that the number is a balance between what is absolutely necessary to give investors the confidence that we are in a strong enough financial position to ramp up completely and meet all our commitments and liabilities, and also to give us a bit of bandwidth to further our growth plans and deliver on our exploration strategy. And you know, this may be another question about exploration, but I'm just going to answer it now as well. I mean, people may say, well, you know, if you need this money, why are you raising money at these low prices to do exploration? You could do that later at a cash flow. The reality is exploration always gets pushed off the priority list, and at some point that will kill you. You know, Yanfolila has a short mine life and we're going underground. Kusa has a short mine life. We were never worried about Kusa having a short mine life because we think there's tremendous exploration potential. But we're now mining, and we're mining, you know, over 100,000 ounces a year will be coming out of Kusa. So every year that we can add to that short mine life beyond the debt repayment tail will be material in terms of the value it creates. Also, it takes time to explore, to find the gold, to turn it into resources, into reserves, add it into the mine plan. So we really need to explore. So I hope that answers that question.
Thanks, Dan. So the next question is on CIG, and it comes in sort of two parts. Sort of firstly, why, given the fact that CIG will be going over the 30% threshold, why hasn't CIG been forced to make a bid for the company? And within it, with a larger holding, will CIG have anyone on from their side on the board?
So in order to do this placing, we had to go to the panel, takeover panel, and get a Rule 9 waiver. So, you know, CIG has committed to not buy further shares, and they are obviously supportive of the company's growth plans, prospects, and supporting us to build a world-class mining company. They do not have anybody on the board. To be honest, if they would like somebody on the board, I would welcome it, and their advice and counsel would be more than welcome. It's something we talk about regularly. At the moment, they are very happy with the relationship and how it works, and there's no need for a board seat at the moment for reasons that may make the relationship more complicated rather than less. At the moment, it's very straightforward, and everybody is in agreement in the objectives and what we're trying to achieve.
Thanks, Dan. So what the question here is, what steps and measures are being put in place to ensure this cash squeeze issue doesn't happen again? And who is responsible for the current situation?
Well, in terms of guarantees and protections that it can never happen again, that's a very difficult question. I mean, obviously, our entire business is about trying to manage performance and make sure that we deliver. And whether that's on maintenance or plant performance or contract miners or environmental issues or community issues, there are always things that can go wrong. You know, there can be no guarantees in mining. But, you know, I think the main reason for this particular issue is the late mobilization and recruitment of the contract miner at Kusa, and it has been an issue that has taken an awful lot of management. There's a lot of factors to it. It's very complicated, and we have augmented our team significantly, brought in extra resources, and are working very closely with the contract miner, much closer than you would hope to have to work through these issues. I mean, as I said earlier, there is a full complement of equipment at site at the moment, and they are producing contracted rates. But, you know, there's still a long way to go to be able to guarantee that performance in that regard is perfect and risk-free. And I think that is a dynamic and evolving process. It will always be an ongoing thing. And that's not just on mining, that's across every discipline in the company. And in terms of, you know, who is responsible for this mess? I mean, everybody is responsible. Everybody from the contract miner through Hummingbird's management to Hummingbird's board to myself, everybody's responsible. But what I would say is it's not an easy place to work. And actually there is an unbelievable amount of good work and effort and achievement that has gone into getting to this place. You know, you remember we started building this project in COVID, very few mines in Guinea. Just look at the issue at the moment with the fuel situation in the country. You know, we are operating an environment where things are difficult and challenging, and that needs to be understood.
Thanks, Dan. Moving to Yamfilila, can you provide more details as to why the recoveries and processing rates are below expected volumes? And is this something that we're looking at, we expect to improve through the remainder of Q4 and into Q1?
During Q4 at Yamfilila, we had an issue with the pinion and the gears at the mill that resulted in some downtime that we weren't expecting. So that probably is why the processing volumes are down a little bit. In terms of mining volumes, there's the ongoing issues with maintenance and fleet, but there's nothing massively material. I think that's really the best I can answer that question, James.
Thanks. And can you give a bit more detail on Kumana East Underground and sort of the levels of development there and the timeline we're expecting next year? Yeah,
sure. So I think we're at maybe 130 meters today into the development. We are looking to be developing at 6 meters a day, and that's a challenging schedule. I'm sure it's very difficult to say there'll be no slippage off that at all, because it's obviously that's a challenging schedule, but we're working pretty intensely on the underground development. We will look to get first ore out of the underground some point during H1 24, and maybe as much as 10,000 ounces during the year, and then it will increase to become a much more significant part of the production profile of Yamfilila going forward.
Thanks. Moving to Kusa, again, could you give some more detail and reasons for the slow ramp up at Kusa? And also we note a fifth fleet is on site, an additional fifth fleet is on site, and who will be paying for this fleet?
Okay, so Well, I think the first bit of the question about the reasons for the slow ramp up are they are really as simple as the contract miner has not mobilized and recruited people as per the contract and as per constant ongoing dialogue. So that situation has become increasingly intense as the years gone on. And, you know, what I can say is we now have their full and undivided attention and everything is on site. The fifth fleet is a risk mitigation strategy that we implemented to bring in an extra fleet for extra mining capacity from a third-party supplier that we are within our rights to do under the contract to do whatever we need to do to get back to contracted volumes and get back to the contract. So we have that extra capacity and we are using it. In terms of who will pay for it, well, ultimately we pay for earth that is moved, but in terms of the current cash flow and the payment for late mobilization, the contract miner is bearing a lot of those costs, and this is an ongoing and complicated discussion that we have to have with them, because obviously they need to be paid, and they need to be paid for work that they do and earth that is moved. But at the same time, Hummingbird can't bear additional costs for things that have been a result of stuff that hasn't been performed to contract.
Thanks, Dan. Given the updated 5,000 ounce expectation, how far away are you from the high grade ore per the map on the earlier slide? And then will the issue with fuel, has this been baked into the updated expectation at Kusa?
So in terms of this year's production, I think the issue with fuel won't really affect that too much. But in terms of where we're at in terms of access to the high grade ore, I might get my numbers slightly wrong, but I think we're at 50 meters depth. Dave might know better. The contact between the oxide and the fresh rock, I think, is it's one bench away from where we are. So you would expect, and we are fairly confident, that the depleted ore zone will get a lot less. Obviously, much harder for artisanal miners to mine fresh rock than oxide saprolite ore. And we expect to access the high grade ore imminently and for grades and volumes to pick up.
Thanks, Dan. In regards to the fuel issue in Guinea, has the company had any update on the issue and any remedies to it?
Unfortunately, the situation is dynamic and live, and the government, we are in daily communication with the government. Excuse me. We're also speaking to our fuel suppliers, and we believe there are solutions to bring trucks in from other countries while infrastructure is re-established. The government of Guinea is doing everything they can to facilitate solutions. So, you know, as I think I said earlier, I think this is a question of days rather than anything more material. But obviously, it's an event that you can't plan for, and it has negative consequences. Yeah.
Moving to Dugby. So why is the company is focusing on Dugby now, given the stretched balance sheet? And when will shareholders get clarity on the plans for Dugby next year?
Okay, so you know, straight after the new year, we'll have a board meeting with the new Pasofino to agree budgets and work plans, which, as I alluded to earlier, will focus on a couple of optimization work streams in the feasibility study, namely metallurgical recoveries, power costs, and some areas of the capex we think we can reduce. We would also like to do a little bit of exploration in the surrounding area to showcase quite how amazing the exploration potential at Dugby is. We are focusing on it now because now is the time. The gold price is high. Pasofino exercised their option to call the restructuring. So once that was done, the die is cast. We can't just sit by and do nothing. We have a controlling interest in Pasofino, and to do nothing would be negligent. Plus, it is an unbelievable opportunity to create value. There was another part to that question, which was, I think, about plans and management. So the management of Pasofino is intact and remaining with the company, and I'm looking forward to working with them and developing plans.
Thanks, Dan. Just jumping back slightly to the fuel supply issue, can you give clarity regarding the reserves on site, as well as the focus on the processing plant over the mining operations?
Well, the reason to focus on the processing plant is it uses less fuel, and you can still produce some ore from the stockpiles. Even though we have, marginal grade, limited stockpiles, we can still produce some gold from them. The mining fleet consumes a huge amount of fuel. So being that we are uncertain as to how long this would take, it's prudent to tone down the consumption in the mining fleet. We have circa 3 or 4 days of fuel at full capacity, so not very much, and therefore that's why we need to tone down the consumption in the mining fleet in the immediate term.
Thanks. Can you give further sort of rationale and clarity on the impacts of the revenue protection strategy we put in place?
The impacts and the what, James?
The impacts and the rationale for the revenue hedging strategy.
Yeah, sure. So the rationale is quite simply, we have a robust deleveraging and repayment plan next year to pay down our debt, and in order to do that, we want to take advantage of this recent high gold price. Now, I am personally a huge gold bull, and I'm sure lots of people investing in gold producing companies want as much exposure to gold upside as they can possibly get. But at the same time, we have to balance that with prudence, and locking in a floor of over 2,000 ounces for 60,000 ounces of gold, which is only, less than a third of our production next year. This gives us a lot of comfort that we can lock in that higher gold price than any of our budgets or forecasts were done at, and that will help with securing our financial obligations. I think it's a win-win really, because you also get exposure to the upside. I mean, if gold goes above 2,150 to significantly new highs, more than 2/3 of our production is still completely unhedged and available to that. They're also short-term hedges. They're only for the next 3 quarters. We will look to review and see how this is going over the next couple of quarters, but it certainly doesn't mean we are penalized. I think it is just prudent management. James.
Thanks. Moving to exploration, what are the top targets for 2024? And are you planning to apply for any additional exploration permits in Guinea or Mali?
Well, so let me do the permits, Dave, and then I'll hand over to you for the targets. But in terms of the permits, yes, we have applied for a number of permits in Guinea. We are assured will be forthcoming at some point. The government of Guinea has not issued any new exploration permits for quite a while, so hopefully that administrative backlog will get cleared soon, because we are excited about expanding our exploration footprint in Kusa beyond our existing licenses and investing in that area. Specifically on priority targets, Dave, over to you.
Thank you, Dan. Yep. So we prioritized targets based on a priority 1, 2, and 3. Priority 1 being the targets that are closest to existing pits, existing infrastructure, etc. So targets that we can bring straight into the mine plan. And I'm not sure the question was relating to both mines, so I'll cover that quickly. But the priority 1 targets for Yanfolila are Gonka. It's a high-grade deposit. We have mined it in the past, in I think last year, but there's a lot left to mine there. We just needed to firm up the geological model, and then busy updating the resource, and we'll target some more drilling around there. So that's definitely one of the priority targets. Sanamali West. So Sanamali West has been a good deposit to us. We've mined Sanamali West main pit, but there's another inferred resource to the north, which is on the same structure as Sanamali West main. It's just widely spaced drilling, so we're going to get in there and firm up that drilling, which will improve geological knowledge and allow us to bring upgrade the resource to bring that into the mine plan. Then we also touched on Karma, which is a smaller resource, but it's a potential maiden resource, and quite excited about it. It's still open. It's we had some good hits there previously, open to the north. We'll try a staged approach, and we'll draw a few fences at a time and just chase it as far as we can. And then Kusa, there's a few targets there that, well, there's a lot of targets there, but the priority one targets that we're looking at. We had a geological consultant or exploration consultant come in early on in the year, and she did a lot of work around sort of targeting near mine quartz veins, etc. So we've got multiple targets there that we're looking at, and we will draw those hopefully early on in the new year. These are all very close to the existing pits, and yeah, look like very credible targets. Then also to the south of Pit 4, the drilling there is shallow, so currently the resource is closed off, but there's a high grade plunge and only shallow drilling there. So that's certainly something that warrants a look at that as well. That's definitely something that warrants some more drilling. And X vein, which I touched on as well, but X vein, we've got this high grade vein sort of vein shear deposit, and we've got the whole X vein west area, which even over the course of the last 20 odd years, there's a handful of drill holes in there. There's all the signs that of prospectivity. There's lots of quartz veining, there's structures, but there's a bit of artisanal work there as well, which is always a good sign as well from that point of view, but there's very little drilling done. So those are the priority targets that we're thinking about for next year.
Thanks, Dave. I think we've got time for a few more questions. Dan, to clarify, was the gold hedge strategy a condition of the placing imposed by CIG, or it was an internal decision?
No, it was an internal decision.
Thanks. Additionally, is there any update on the progress in the search for a new non-exec chairman?
Well, there is progress, but nothing tangible. And to be honest, being totally blunt, the company hasn't really been in the best position in the last 3 or 4 months to attract the sort of caliber of person that we want. But there are ongoing conversations, and it's an ongoing issue.
Thanks. And to just go back slightly on the hedging, who are the hedgers with?
So we've used a company called Oromet, who is our agent that we sell all our gold through.
Perfect. And to finish off, so what are the company's key goals for FY 2024 at Kusa, Yanfolila, Dugby, and as a company as a whole?
So, Yanfolila, maintain the development schedule for the underground, try to ensure that we are fully operational from the underground for full, from 25 onwards, a full contribution from the underground to make sure we can have a longer life mine. Costs are in line with the production profile of sort of 80 to 90,000 ounces a year on an ongoing basis, and develop the resource base accordingly. That is what I look to achieve out of Yanfolila. Is the priority, and everything else follows from that. We, during the year, want to pay down our debt significantly, strengthen the balance sheet, find some exploration success, hopefully get a couple of exploration licenses, and really commit and build our footprint in Guinea around what is an exceptionally high-grade asset. In Liberia, obviously, we will be looking to get more involved from now. This consolidation is done. as I said, Hummingbird with minimal dilution, but we will be looking to, optimize some of those economics around what we think is an unbelievably robust feasibility study. I mean, you have a project with over $1 billion NPV in a strengthening gold price environment. We will be looking to obviously have conversations ourselves with potential development partners or funding routes to take that project forward. Up till this point, we have been a passive partner in that joint venture. So we'll be looking to get more involved on that basis. And, what I would like, 1,000-ounce producer from multiple mines in multiple jurisdictions, and actually a long way down the road to being a mid-tier, robust gold mining company.
That's great. Dan, James, David, thank you very much indeed for your time and for updating investors. And thank you to everybody for your engagement this afternoon. James, if you're happy, Dan, if you're happy on that basis, I'll conclude today's presentation. Thank you once again for your time. Ladies and gentlemen, if I could ask you please not to close this session, as we will now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Hummingbird Resources PLC, I'd like to thank you for attending today's presentation and wish you all a very pleasant afternoon and a happy Christmas.